Hello guys. Welcome to our channel. Today we are going to explain about Bitcoin.
So, what is going on with Bitcoin? We've seen some incredible moves lately, and honestly, every time I check the charts it feels like we're on the edge of something massive. A lot of you have been asking me what I think is coming next, whether we're about to see a huge surge or if we're heading for another one of those brutal crypto winters. The truth is, it's complicated, and there are powerful forces pulling the price in both directions. That's why today, I want to break it all down for you. No fluff, just the facts. Here's a quick technical outlook and the 7 biggest reasons Bitcoin could surge higher. Plus, why a 50% crash is always possible. We're going to dive deep into everything from the halving to what the big banks are doing to how the global economy is basically forcing people to look at alternatives like Bitcoin. It's a fascinating puzzle, and understanding all the pieces is key to navigating this market without getting completely wrecked. We'll look at the bullish signals that have traders excited, but we also have to be realistic about the risks. This isn't a market for the faint of heart, and a sudden drop is always lurking around the corner, ready to liquidate anyone who gets too greedy. Before we get into it, let me just say for the YouTube algorithm that this is for information purposes only, not financial advice. My goal is to give you the information so you can make your own informed decisions. I'm just a guy with a camera sharing my research and what I'm seeing in the markets. So, with that out of the way, do me a quick favor and smash that like button for the YouTube algorithm, and let's get right into the first major catalyst. Alright, first up, let's talk about the Bitcoin halving. If you're new to crypto, this is probably the single most important concept to understand about Bitcoin's supply. Think of it like this: every 10 minutes, a new block of transactions is added to the Bitcoin blockchain, and the miners who add it get rewarded with a certain amount of new Bitcoin. The halving is an event that cuts this reward in half, and it happens automatically every 4 years. This is literally coded into Bitcoin's DNA, and it's designed to make Bitcoin a deflationary asset over time. It's like if a gold mining company suddenly announced that from now on, they could only dig up half as much gold as they used to. Scarcity goes up. So why is this such a big deal for the price? It's simple supply and demand. After a halving, the amount of new Bitcoin entering the market is slashed by 50%. If demand stays the same, or more importantly, if it continues to grow, you have less supply chasing that demand. This supply shock has historically been the trigger for Bitcoin's most explosive bull runs. If you look back at the charts after the 2012, 2016, and 2020 halvings, you'll see a familiar pattern. There's usually a period of sideways consolidation for a few months, and then, boom, the price starts a massive climb to a new all-time high. It's not an overnight thing, but the effect is undeniable. Now, some people will argue that this time is different, that the halving is priced in. And to some extent, they might be right. The market is more mature now, and more people know about the halving. But you can't ignore the fundamental mechanics. The daily issuance of Bitcoin drops from around 900 to 450. That's a massive reduction in new supply that miners can sell on the market. Over a year, that's over 164,000 fewer Bitcoin hitting the exchanges. When you pair that with the other factors we're about to discuss, it creates a very powerful tailwind for the price. The second reason is something we've been hearing about for years, but now it's finally happening in a big way: institutional adoption. For the longest time, Bitcoin was seen as a fringe asset for tech nerds and retail speculators. The big money, the Wall Street firms, the pension funds, they all stayed away. It was too volatile, too unregulated, too weird. But that narrative has completely flipped on its head. Now you have some of the biggest financial players in the world not just dipping their toes in, but diving headfirst into the crypto space. This is a game changer, and it's happening right now. The most obvious example of this is the launch of spot Bitcoin ETFs, or exchange-traded funds. This was a monumental step because it gives traditional investors a super easy, regulated way to get exposure to Bitcoin without actually having to buy and hold it themselves. They can just buy it through their regular brokerage account right alongside their stocks and bonds. We're talking about giants like BlackRock, Fidelity, and Franklin Templeton. These firms manage trillions of dollars, and they are now actively marketing Bitcoin to their massive client bases. The inflows into these ETFs have been absolutely staggering, creating a constant source of buying pressure. This does two things. First, it brings a massive wave of new capital into the market, money that was previously sitting on the sidelines. Second, and maybe even more importantly, it provides a huge stamp of legitimacy. When a firm like BlackRock, the world's largest asset manager, says that Bitcoin is a legitimate asset class, it changes perceptions. It boosts confidence across the board, from individual investors to corporations considering adding Bitcoin to their balance sheets. This institutional embrace is what could turn a regular bull market into a supercycle, because the amount of capital they control is just on a completely different scale. Now let's zoom out and look at the bigger picture, because what's happening in the global economy is another massive driver for Bitcoin. We're living in a really uncertain time. Governments around the world printed unprecedented amounts of money over the last few years, and now we're dealing with the consequences: persistent inflation. Your cash in the bank is losing its purchasing power every single day. The value of national currencies, whether it's the dollar, the euro, or the yen, is being deliberately devalued by central banks. People are starting to wake up to this and are looking for a way to protect their wealth. This is where Bitcoin's narrative as digital gold really starts to shine. It has a fixed supply of 21 million coins, period. No government or central bank can decide to print more of it to pay for their spending. This makes it an incredibly attractive hedge against inflation and currency debasement. In countries with hyperinflation like Argentina or Turkey, Bitcoin isn't just a speculative investment, it's a lifeline. It's a way for ordinary people to escape their failing local currency and preserve their savings in a global, decentralized asset that their government can't control or confiscate. On top of inflation, we're also seeing growing instability in the traditional banking system. We saw a few major bank failures last year that sent shockwaves through the market. When people see banks collapsing, it reminds them of the counterparty risk they take by holding their money in a traditional account. With Bitcoin, you can hold your own keys, meaning you have full custody of your assets. You are your own bank. This combination of high inflation, currency devaluation, and banking fragility creates a powerful incentive for people and even institutions to allocate a portion of their portfolio to an asset that exists outside of that traditional system. Alright, so this next point is pretty closely related to the last one, but here we're focusing specifically on what central banks like the Federal Reserve actually do. The price of assets like Bitcoin and stocks is, honestly, super influenced by liquidity, which is just a fancy way of saying how much money is sloshing around in the financial system. When central banks want to stimulate the economy, they basically do two main things. They lower interest rates, and they do something called quantitative easing, or QE for short. Lowering interest rates makes it way cheaper to borrow money, which encourages more spending and investment. QE, on the other hand, is when they literally print money to buy bonds and other assets, so they're injecting cash right into the system. Both of these moves are like pouring gasoline on the fire for risk assets like Bitcoin. If interest rates are near zero, holding cash or bonds just isn't attractive anymore because, well, you're earning next to nothing. So, investors start looking for higher returns somewhere else, and a lot of that money ends up flowing into the stock market and more into crypto. We saw this play out in a huge way during 2020 and 2021. The Fed cut rates to zero and unleashed massive QE, and yeah, Bitcoin went on one of its most incredible runs ever. Now the Fed has been raising rates to fight inflation, which has definitely been a headwind for crypto. But here's the thing, the market is always looking ahead. The general consensus is that the next big move for central banks will be to start cutting rates again, or maybe even restart QE if the economy starts to weaken a lot. As soon as there's a clear signal that the money printer is about to get turned back on, you can pretty much expect a flood of capital to start rushing back into speculative assets. And actually, traders try to get ahead of these moves, so the price of Bitcoin often starts to rally even before the rate cuts actually happen, as investors try to jump in before the wave of new liquidity hits. Alright, let's switch gears and talk about the charts, because honestly, human psychology and technical analysis play a massive role in a speculative market like Bitcoin. Price action isn't random, it's driven by the collective emotions of millions of traders: fear, greed, and most importantly, FOMO, the fear of missing out. When Bitcoin's price starts to move up and breaks through a key resistance level, it acts like a magnet for new buyers. These are levels on the chart where the price has struggled to get above in the past. Breaking through one sends a powerful signal to the market that the bulls are in control. Think about what happens when Bitcoin breaks a major psychological level, like $50,000 or its previous all-time high. It gets blasted all over the news. Your friends who don't care about crypto start asking you about it again. This media attention and social buzz creates a powerful feedback loop. New retail investors who were waiting on the sidelines see the price going up and they get that FOMO feeling. They jump in, which pushes the price even higher, which attracts more people, and so on. This is how parabolic rallies are born. On top of that, you have sophisticated traders and algorithms that are programmed to buy on these breakouts. They use technical indicators and chart patterns like bull flags or ascending triangles to identify entry points. When a key level breaks, it can trigger a cascade of automated buy orders, adding fuel to the fire. It also forces anyone who was shorting Bitcoin, betting that the price would go down, to buy back their positions to cut their losses, which further accelerates the upward move. This pure technical momentum can sometimes become a self-fulfilling prophecy, driving prices far higher than the fundamentals might suggest. In the world of crypto, sentiment can change in the blink of an eye, and nothing moves sentiment faster than a major news headline. Bitcoin's price is extremely sensitive to the narrative of the day. A single positive news event can trigger a 10% rally in a matter of hours. This could be anything from a major company like Tesla or MicroStrategy announcing they've added more Bitcoin to their treasury, to a country like El Salvador making it legal tender. These events act as powerful validation and can kickstart a wave of buying. Regulatory news is another huge factor. For years, the crypto market has been held back by regulatory uncertainty, especially in the United States. Investors have been worried about a potential government crackdown, so any news that points towards clearer, more favorable regulations is seen as extremely bullish. For example, if the SEC were to approve an Ethereum ETF, or if Congress passed a bill that provided a clear framework for digital assets, it would remove a massive cloud of uncertainty and likely lead to a significant price surge, as it would signal that crypto is here to stay. Finally, you have partnerships and technological breakthroughs. Imagine if a tech giant like Apple or Amazon announced they were integrating Bitcoin payments. The impact on the price would be astronomical. Similarly, positive developments within the crypto ecosystem, like major upgrades to the Bitcoin or Ethereum network that improve scalability or security, can also generate a lot of excitement and speculative buying. The market is always looking for the next big story, and in a 24/7 global market like crypto, that story can break at any time and from anywhere in the world, causing rapid and dramatic price movements. The final reason Bitcoin could surge higher has less to do with Bitcoin itself and more to do with the entire crypto ecosystem that's being built around it. While Bitcoin is the king, there's a whole universe of other digital assets or altcoins as well as layer 2 scaling solutions that are bringing incredible innovation to the space. Think about things like DeFi or decentralized finance, which is rebuilding the entire financial system on the blockchain without banks. Or NFTs, which are revolutionizing digital ownership for art, gaming, and collectibles. All of this activity creates a vibrant, growing industry. So how does this help Bitcoin? Well, Bitcoin is the main gateway into the crypto world. For most new investors, Bitcoin is the first crypto they buy. It's the most well-known, the most liquid, and the most trusted. As excitement builds for DeFi, NFTs, or the next hot altcoin, it draws more people and more capital into the overall market. A lot of that new money flows into Bitcoin first before it trickles down into other assets. The growth of the entire ecosystem acts as a giant marketing campaign for Bitcoin, increasing its visibility and network effect. Furthermore, the development of Layer 2 solutions for Bitcoin, like the Lightning Network, is addressing one of its biggest criticisms: its slow and expensive transactions. These Layer 2s allow for near-instant, almost free Bitcoin transactions, making it much more viable for everyday payments. As this technology matures and gains adoption, it dramatically increases Bitcoin's utility beyond just being a store of value. When the entire crypto space is thriving with innovation and new use cases, it reinforces Bitcoin's position as the foundational asset and reserve currency of this new digital economy, attracting more long-term believers and capital. So there you have it, 7 powerful reasons why Bitcoin could be gearing up for a major move higher. From the built-in supply shock of the halving to the flood of institutional money and the supportive macroeconomic backdrop, there's a very compelling bullish case to be made. The growth of the entire crypto ecosystem only adds more fuel to that fire. When you put all these pieces together, it's easy to get excited and think that the price has nowhere to go but up. But this is crypto, and it's essential that we stay grounded and look at both sides of the coin. Remember, even with all these bullish triggers, a 50% drop in Bitcoin is always possible. History shows it can happen fast. We've seen it happen time and time again. A single piece of bad news, a regulatory crackdown, or a major hack can change market sentiment in an instant and trigger a cascade of liquidations. The crypto market is famously volatile, and you have to be prepared for those violent swings. That's why it's so important to have a plan and to manage your risk properly. Never go all in, always use risk management, and only invest what you can afford to hold through that volatility. I hope this breakdown gave you a clearer picture of the forces at play in the Bitcoin market. As a final reminder, this is for information purposes only, not financial advice. Always assess risk before trading and do your own research. The goal is to survive and thrive in the long run, not to get rich overnight. If you got any value from this video, please do me a huge favor and smash that like button. It really helps the channel out. Thank you so much for watching, and I'll see you in the next one.